If you think the market is just chaos, impossible to predict, I've got news for you. There's a tool that shows hidden levels with mathematical precision. It's called Fibonacci retracement. And in this video, I'll show you what it is, how to draw it, and most importantly, how to actually use it in real trades. Let's go. First, why actually use Fibonacci levels? Price doesn't move in a straight line, it moves in waves. Push up, pull back, push up again, and so on. Fibonacci helps you understand how deep the pullback might go before the trend continues. How to draw Fibonacci levels correctly. This part is crucial. If you learn how to draw it right, you'll already be ahead of most traders. First, Fibonacci retracement only works when there's a strong move either up or down. If the market's in consolidation or in a flat, it won't give you reliable signals. Now go to your chart tools and select Fibonacci retracement. Then find the last strong impulse, a clear move in the direction of the trend. Set 0 at the end of the impulse, set 1 at the start. Important. Draw it in the direction of the trend, and make sure to include both the candle body and wick when building your levels. Now the retracement levels appear on your chart, and they work like support and resistance zones, showing you where price might stop or reverse. Now I'll show you how to trade with Fibonacci. Don't get overwhelmed by all the levels. Focus on the key one, 0.618, also known as the golden ratio. Why? Because this level tends to work really well. When price touches it, it often pauses or reverses back with the trend. And this is where you have to combine it with price action. For example, if price hits these numbers and fails to break through, maybe just taps the level with a wick and pulls back. That's your signal the market is reacting. This is when you look for candle patterns. First example is doji, small body, long wicks, means indecision, and that price is hanging around the level. If it forms on the Fibonacci level, that's your first warning the pressure has weakened, and there might be a reversal. Second, shooting star, long upper wick, small body below. It means price tried to push up, but got rejected in a moment. Bearish reversal. Last, engulfing candle. One big candle fully covers the previous one in the opposite direction. Strong reversal signal. But these candles alone are not enough. Always wait for an impulse candle in the direction of the trend. That's your true entry confirmation. And what if price breaks the golden ratio level? Good question. In this case, market may turn flat, and Fibonacci levels won't work. But if it only breaks the level with a wick, that means the level is still holding and the trend is still alive. So watch how price reacts at the level. I want to start making money online, but I don't know where to start. What if I lose my money? I hear this all the time. Look, trading isn't some magic button to get rich overnight. But if you want to try it the right way, without wasting money or months figuring things out, here's how. I trade on quotex, and right now, you can copy my trades for free while learning in real time. No upfront fees. I'll get a commission from the platform instead. That means you can test everything on a demo, see how it works, and decide for yourself without spending $1. It takes minutes. You get the currency pair announcement. Open it on the platform. Then you get the signal. Place the trade. And that's it. Will this make you a millionaire tomorrow? Of course no. But it will get you started, you'll see how it works, and see your first profit without risk. This is the easiest way to step into trading. Just check it out and see if it's for you. Click the link, get set up, and let's go. Let me show you exactly how I used this in a recent session to make it all clear for you. Here's a strong downward impulse, followed by a pullback. Perfect setup to apply Fibonacci. I draw the retracement from top to bottom because it's a downtrend. As you can see, price broke through all the other levels, but we don't even look at them. Then it stopped at 0.618 level. It didn't break it, just touched it with a wick. That confirms the downtrend is still active. If it had closed above that level, we'd likely see a flat or a full reversal. I was waiting for the price to come back to that level. Now here's the tricky part. If you weren't using Fibonacci, you'd see this as a local uptrend, even a triangle continuation pattern. A lot of beginners would have gone long here, but we use Fibonacci and watch the reaction of the price. Price touches the resistance zone again, only with a wick, and goes down. Yes, no candle pattern this time, but the level is holding. Price can break it. That was enough. So I opened a put trade for 18 minutes because I was on the 2-minute chart and there was another 0.5 level below, another resistance. I gave the trade extra time to avoid getting caught in a pullback. Trade closed in profit. Fibonacci isn't magic, but when used right, it gives you structure and precision. If this video helped you, like it, subscribe to the channel, and don't forget to join my Telegram. That's where I chat with you and post live trade ideas and setups. See you in the next one.